Bollinger Band itself, the band is come up with three lines. One is for the upper level, another is for the lower level, and the third line is for the moving average. If you want, I can just show you. Those are the Bollinger Band here. I'm gonna put it for you in a big screen here, so you're gonna see how the Bollinger Band works. Now, we have those three lines that are the Bollinger Band. Let me just remove everything for you again. So I'm gonna add them so you will know what's the Bollinger Band. Now, this is the Bollinger Band. Let me just remove it and I will add it for you. So actually we have a blank shot. The only thing that we have here, we have candles, and we have an interval of 1 week, meaning each candle represents 1 week. So now, when you want to add the Bollinger Band, just click on the indicators. I'm going to show you, just click here, indicators, and you add Bollinger Band. This is the Bollinger Band. You can paint them. That means you can put any color. We call this one the Bollinger Band top or the upper level. I can put this in dark or black. I can put the middle one, which is the moving average for it. I can put this in blue. And the Bollinger Band bottom, which is the lower level, and I can put this in red and save it. So we get three things. So the Bollinger Band is being divided by three levels. The first level, which is the first line, which is the black line, we call that the upper level, which is the top. And we call the middle one, the blue one, we call that moving average. We consider it as a moving average, the blue one. And the last line is the lower level. So how we consider the moving average? It means doing by three things: the upper level, the middle, which is the moving average. We call that the middle range or moving average. And the last one, we call it the lower level, which is the bottom. So we know what really the moving average does. It shows you the overbought and oversold. Now, it works whenever the price is over the upper level, which is the top here. We call that overbought. This is the black line, and we call this green candle. If the green candle was over here, I'm going to show you later, we call that overbought. And then when it's below the red line, between the Bollinger Band, it's oversold. So the cycle, the round is, we call that the Bollinger Band. It's composed with three lines: the upper level, the middle range, which is the middle range we consider as a moving average, and the last one, it is the lower level. Now, so when price is moving closer to the upper band, it indicates that the market may be overbought. Whenever the price moving closer to the upper bands, as you can see, close to the black line, it's getting close to overbought. And then when the price is close to the lower, which is the red line, we call that oversold. Now, if price pull back within the uptrend and it stay above the middle band and move back to the upper band, that indicate a lot of strength. Understand that. Anytime the price, we call the price, which is the candle, this candle is the price, we have now 1 week candle or interval 1 week. So that means each candle represents 1 week. So the last green candle you see here is for 1 week. So what we just said, we said if the price pull back within the upper uptrend or the upper level is this black line. So whenever the price is pulling back to the upper level, that means it stocks. It's covered on a thing. So, and it stay above the middle band and move back to the upper band that indicates a lot of strength. So that means this is not what we see here. We see now that price is moving below the upper level. This is the upper level, and this is the moving average, but the price, which is the candle, is moving below the moving average and is way back below the upper band, which is the upper level. So that means for the interval of 1 month, we have Tesla. That means it's coming down for the 1 month, for the whole month. That means it's coming down because what happened? Price, the candle, is not above the moving average or the middle, is below. So it's come up from the top of the upper level all the way down is under the moving average. That means for the whole month, Tesla is still in a bearish momentum because what happened? Price is not above. For that to be strong or stay bullish for the whole month, I'm talking for the whole month, this candle you can see here, the green candle, has to be above the moving average, which is the blue line, because, and then it has to come up below the upper band, but above the moving average. So for the whole month. Now we're gonna just see the difference now. Let me just try to put it for 1 week to see how it looks like. We already put for 1 week. So let's just to see if I can put it for 1 day to see how it looks like. Now, for 1 day, this is something, it is different. I'm just doing it just to show you the difference. For the 1 day, what you can see the candle now is in red. But for 1 day as today, it is a strong bullish because remember what we said? We said if price pull back within the uptrend or upper level and it stay above the middle band and move back to the upper band, that indicates a lot of strength. Meaning the price here is coming back a little bit. It was overbought because it's a little bit was above the black line, but it's coming back here to the upper band. Yeah, it's coming back. It's coming back to the upper band. You see, and but it stay above the moving average. So whenever the price stay above the moving average, but it's coming back and going back to the upper band, it's still in bullish. So for 1 day, for the interval 1 day, it's still in bullish. Whereas for the 1 week we just saw is bearish because the price here is coming back all the way from the upper level, which is this one, the range of overbought, and is the price is under the moving average. That's mean for the whole month, Tesla still in bearish momentum. And then for 1 day, for the day, is bullish. If you have to buy for the 1 day, doing a trade or an option for the day, it can be bullish because price. See what that means? The next step of Tesla might be bullish temporarily. If you have to do a trade, a very fast trade for 5 minutes, 1 day, or 15 minutes, it's still in bullish, but it's a quick trade. But that doesn't mean you have to buy and sell and hold. This is just a education purpose. You don't have to buy because it's just for information. Now, let's just to see last thing, just to see a difference. If we can put it for 1 hour, what it can show for 1 hour. See, for 1 hour, it's a bearish. You see the difference? Because price here, the last candle for 1 hour, because each candle represents 1 hour. So the last candle, what it does, it shows you is under the moving average. Anytime price is under the moving average, it's bearish. For that to be bullish, price has to be above the moving average, because the moving, the blue lines in the Bollinger Band is considered as a moving average, and the price is under it, and also it's come up below the upper band. The upper level is the overbought here whenever it's overbought. So remember what you just said. We're gonna repeat again. If price is pulled back within the uptrend and it stays above the middle band and moves back to the upper band, that indicates a lot of strength. So that means here in 1 hour, it doesn't have any strength because price is below the moving average, and then it's coming down. Let's just see another 4 hours to see what it does for the 4 hours. The 4 hours, you see, different. I'm just giving you some quick tool to see. Now what happened? The 4 hours is a bullish because what? Because price coming from the upper level is coming back, but it's going back up. Like this is trend. It's going way to the uptrend, upper level, but and it's still price still above the moving average. So that means for 1 hour, for 4 hours, because each candle represents 4 hours, so that means for the 4 hours, still in a bullish momentum. See, easy to see. Remember, the Bollinger Band has 3 lines. When you put the Bollinger Bands, it composes with 3 lines. The upper level, which is the top, whenever you press. You see, as you can see here, all those green lines for 1 hour, it was overbought at that time because price is above. Whenever price is above the moving average, the Bollinger Band, which is the upper level, is a overbought. You see, here is overbought, overbought there, overbought there, overbought here. But here is not overbought because it's inside Bollinger Band, inside the Bollinger Band, and also it stays strong. Price try to go back up, today, and then it's above the moving average. It's still in bullish movement. Let's do a last thing. Let me see now for what minutes we can take. Let's just take like 1 month to see what it does for 1 month. See, for the whole month. For the whole month, what happened? It's a bearish momentum because what happened? You see, that's a bullish band. That's a upper level, and this one, the blue line, is a moving average from the Bollinger Bands because the Bollinger Band come up with 3 lines. This one, upper level, and moving average, and lower level. And price, each candle represents 1 month. So this month of candle, price is closed a little bit above, but what happened is a little bit bullish somewhere because what happened, price is closed here above the moving average a little bit. That means for the whole month, it's not too bad because you see the line, the blue line is here, and just a little bit close. If I would just put, because the line here is close to, let me just put a resistance here, try to put that resistance here to see what it's going to look. Price close just a little bit above. It's like 231, 231, see? Because, and then the Bollinger Band, which is the moving average, is a little bit under this price when it's closed. So this give you, just remove it, this give you a little bit strength of bullishness because price is just closes just a little bit above the Bollinger Band. So that doesn't mean it's not a strong bullish, but it's a bit bullish because price is a bit close above for the whole month. So anything can happen, it can pull back, but going back. But for 1 week, it's different. It's different, you see? It's bearish. For 1 day, is bullish. But if you have to buy for 1 day, that's the way. And then for 1 week is bearish, and 1 month is a little bit bullish for the whole month. So my friend, that's the way we do the study. If you like the video, just let me know, subscribe, like, and share, and leave your comment. And that's the way we do some study. But that doesn't mean you have to buy, sell, and hold. It's just for educational purpose. It was Harry. Thank you for being watching. And like, share, subscribe. See you, my friend. Take care, and we'll keep in touch. See you. Take care. See you. Bye.